One of my clients made over $61,000 in net income from a single Airbnb last year and still paid less in taxes than the average W-2 employee. Sounds crazy, right? Short-term rentals or STRs are one of the fastest growing ways to build wealth in real estate. Platforms like Airbnb and Vrbo have made it easier than ever to turn your property into a cash flowing asset. But here's the thing, it's not just about getting bookings, it's about understanding how to run your rental like a business, avoid costly mistakes, and take advantage of the massive tax benefits available to you. Before we jump into the good stuff, let's talk about some of the most common mistakes people make when getting into short-term rentals. Number one is they underestimate the time and systems required. STRs are not passive income, at least not at first. You're not just a landlord, you're a hospitality manager, a marketer, and a bookkeeper. Number two is they assume every property can be a STR. That's simply not true. Local zoning laws, HOA rules, and city ordinance can shut down your operation before it even begins. Number three is they ignore the tax side. This one is huge because STRs are treated differently than long-term rentals. If you don't structure your rental properly or claim the right deductions, you could be overpaying the IRS by thousands. And don't even get me started on poor pricing, bad reviews, or underestimated maintenance costs. All of these challenges are real, but here's the good news. Every single one of them can be solved with the right strategy. Hey family, let's take a quick break. I hope you're gaining massive value from this video, but let's be real. Over 75% of people watching these videos aren't even subscribed yet. If you're serious about building real wealth and keeping more of your money, hit that subscribe button and turn on your notifications. I'm offering free discovery calls right now for those who are ready to take action and take control over their taxes, their business, and their future. That's right. This is your chance to get a personalized, comprehensive plan to keep more of what you earn. I'm talking about saving $10,000 to $50,000 or more in the first year alone. Click the link below to book your free call, but don't wait. Spots are limited. Let's lock in your savings and your strategy. Now, let's get back to the video. Now for the part you've been waiting for. How to maximize your profits and legally lower your taxes as an STR host. Number one is optimize your pricing with dynamic tools. Use software like Price Labs or Beyond Pricing to automate rate changes based on your demand, seasonality, and local events. It's like having a pricing manager on autopilot. Number three is maximize deductions. You can write off your mortgage interest, utilities, repairs, cleaning services, insurance, as well as the depreciation on the property. And you can also write out startup costs like furniture or branding. And if you travel to check on the property, you might be able to write that off as well. Number four is leverage the Augusta rule, section 280A. If you own a business, you can rent your home to your business for up to 14 days per year and deduct the expense while the income is tax-free. It's advanced, but powerful. Number five is set up a business bank account separate from your personal account. Bookkeeping software, LLC if needed. This is key to protecting yourself and staying audit proof. Let's talk about implementation because strategy without execution is just theory. One of my clients, a nurse in Georgia, set up a 2-bedroom apartment near a hospital and used Price Labs for dynamic pricing. With a $30,000 annual income, she applied the 7-day rule, wrote off over $10,000 in expenses, and avoided self-employment tax. This is a win-win. Another client added a hot tub, a coffee bar, and local guidebooks. They weren't the cheapest in town, but they were booked out months in advance and had a 4.98 star rating. That small upgrade added $12,000 to their yearly income. One investor I worked with had 4 STRs across 2 states. We implemented a tax strategy that included depreciation, home office deductions, and a solo 401k. His tax bill dropped by over $19,000. Bottom line is, these aren't just tax hacks. They're wealth building tactics. That's how you go from side hustle to serious business. If this helped you out, hit the like button and subscribe for more real estate tax strategies and smart investing tips. Drop your questions about STR taxes in the comment section below. I'll make sure I'll respond to every one of them. And check out my next video about the 5 tax strategies the wealthy use that you can too. You do not want to miss out. Thanks for watching, and remember, it's not about how much you make, it's about how much you keep.